Students, today's topic is insurance. That is from the 4th chapter, business services. In the last class we studied about the first auxiliaries to trade or first business service, that is known as banking. We studied bank, types of banks and functions of commercial bank. Now we are going to study the detail regarding insurance, because insurance also plays an important role for the development of the business concern. Because business is interrelated with the risk. Without risk, business is not possible, we can say. One of the important nature of business is called as risk. See, anything can happen anytime. Some uncertain events can occur in the business concern, in the form of what changes in the fashion, natural calamities, man-made calamities. So this may lead to heavy loss to the business concern. So it is the responsibility of each and every businessman. He has to take some precaution in order to minimize the loss. He cannot avoid the loss, but at least what he can take the precaution to minimize the loss by taking one service from an agency that is known as what? Insurance. So what do you mean by insurance? Let us see. Insurance means it is a protection from financial loss. Insurance is giving protection from financial loss. If the businessman is not taking insurance and fire occurs in the factory, the total goods destroyed due to fire, then the full loss will be borne by which person? The businessman. In case he might have taken the fire policy, then after the occurrence of fire, the insurance company will be compensating the actual loss. So through insurance, it is giving some protection to the businessman from the financial loss. Okay? Or insurance may be called as it is a contract. It is an agreement made between two parties. Who are they? Insurer and the insured. Insurer is the insurance company which issues the policy. Insured is the person who takes the policy. The person who takes the policy is called as insured. So between these two people, they are making agreement. So what type of agreement? Insurer is giving an assurance to the insured in case if any uncertain events take place in the form of loss, then after the loss I will be giving the particular amount of compensation to you by considering what? The premium paid by the insured. If the insured has given the premium, by considering the premium, insurer is ready to give the compensation against the loss. So let us see some terms which are relating to insurance. The first one is called as insured. Just now I told insured means the person who takes the policy. The person who takes the policy for protection against certain loss is called as insured. In life insurance, the insured is called as the assured also. Or in short, we can say insured is the policy holder who is taking the policy. Then second one is called as insurer. Insurer means from which institution or from which agency the insured is taking the policy. That organization is called as insurer. The firm is called as insurer. So the firm is what? Agreeing to compensate the insured against the loss. Okay? In case of life insurance, even insurer is also called as assurer. Insurer is also called as assurer. And the third term used in insurance is called as premium. So I told there is an agreement is made between two parties, insured and the insurer. Insurer given an assurance in case loss comes, I will be giving some amount of compensation. But why the insurer is giving the compensation? Because insured is paying some amount of money periodically or on lump sum basis. So that amount paid by insured to the insurer is called as premium. The premium is called as the consideration for which the insurer agreed to insure the insured. Understand? If the insured is not paying the premium, the insurer may not give the compensation. So premium is the consideration, or premium is the amount paid by which person? Insured to the insurer. Fourth one, policy. So the agreement is made on a written document, that is called as what? Policy. Policy means the statement of contract between which people? Insured and the insurer. So in this policy only they used to state about the terms and conditions of the contract. What are the rules they are going to follow? Everything stated in the policy. Then fifth one is called as claim. Premium, I told, it is given by insured to the insurer. Claim means it is a demand made by insured on insurer after the occurrence of loss to give the compensation. Or we can say claim means it is a demand made by insured to whom? Insurer. To compensate for loss. Then proposal. Actually, if the insured want to take a policy, at the time of taking policy, he will be making a request to the insurer. The request is called as what? This proposal. The request is called as proposal. We can say proposal means it is a written request by the insured to the insurance company to issue an insurance policy. In case if you want to take admission in a college, you are filling the form, request form. Like that only, insured, if you want to take a policy, he will be filling a form that is called as proposal. And the last one is called as subject matter. On which property the policy is taken, that is called as subject matter. We can state, in case of life insurance, what is the property? Life is the property. In case of fire, we can say any property or any factory building, we can take it as a subject matter on which the fire insurance is taken. In case of marine insurance, the cargo or the ship. Cargo means what? Goods, or the ship, vessel, through which they are transporting the material from one country to other country. So this is the detail about this. Are the terms we are going to use in insurance. Let us see the next one, principles of insurance. Principles is nothing but the rules and regulations, some conditions they have to follow at the time of taking insurance. The first principle is called as insurable interest. Then at most good faith, indemnity, subrogation, contribution, causa proxima or proximate cause, or mitigation of loss. Let us see one by one the principles. The first one is called as principle of utmost good faith. That means here two parties are there mainly. Who are they? Insured and the insurer. So between the two parties, good faith should be there. Good faith in the sense means what? For example, whenever insured, he is going to take a policy about his life. For the life he is going to take the policy means what? He has to give the correct information. He has to disclose all material facts clearly, completely and correctly to the insurer. In case, before taking the policy, if he had any problems, physical problems, so the fact should be informed to the insurer. In case if he is not informing the fact and he is taking the policy, and something happened after the policy is issued, then this matter the insurance company come to know. This person had so and so deceased before taking policy. Then the family members of the deceased persons are not eligible to get any insurance amount from the life insurance corporation. So the insured has to give correct and complete fact to the insurer. But like that only, insurer also responsible to give relevant information, correct information regarding the terms and conditions of the contract. About the policy details, the insurer should not hide any information. Everything should be correctly told to whom? Insured. In case, for example, Mr. A, he has taken a life insurance policy. But before taking the policy, he had a surgery, heart surgery. But he hid this information. By hiding the information, he has taken a life policy. But after some period of time, the person died. After the death of the person, just before giving the insurance amount, the insurance company made an inquiry. Then at the time of making inquiry, they come to know this person had a surgery before taking the policy. But this person not followed which principle? Principle of utmost good faith. So due to this reason, insurance company can stop the insurance amount. So it is better all the details should be given to the insurance company before taking the policy. So that principle is called as principle of utmost good faith. The second principle is called as principle of insurable interest. Principle of insurable interest. The principle of utmost good faith is applicable to all insurance. All insurance means what are they? Life, fire and marine. Like that only, this principle also applicable to all type of insurance. What do you mean by principle of insurable interest? For example, if a person is taking a life policy on the life, he should have some insurable interest. If a person is taking a policy on his flat, on the flat, he is the owner. In case the flat is due to some problem, it is a short circuit due to which the flat is burned, he will be becoming the financial loser. Understand? So the person should show insurable interest on the subject matter. It means some financial interest on the subject matter. In life insurance, it should present at the time of taking the policy. Because for his life, he is taking the policy. He should love his life. He should try to protect his life. In fire and marine, at the time of taking policy and at the time of occurrence of loss also, this principle should be applied by which person? Insured. Okay, so once again I am repeating, insurable interest means some financial interest in the subject matter by which person? Insured. The insured must have insurable interest in the subject matter of insurance. So this is applicable to all type of insurance. For example, a person has insurable interest in his own life and property. Understand? One person is living in a flat on rental basis. Will he able to take what? Insurance for the flat? He is not having financial interest on that because he is not the owner. In case something happen also, he is not going to become the loser. So only who will be taking? The people, those who are having financial interests. Those who are the real owners, they will be taking. Only that people are eligible to take what? Insurance. Next, the third one is called as principle of indemnity. The term indemnity is called as compensation. Actually, this principle is not applicable to life insurance. Why? Because as per this principle, insurance company will compensate only the actual loss. Only the actual loss. For example, Mr. X has taken for his go down one policy, he has taken fire policy. The policy amount is 5 lakhs. But due to fire, damage arranged in the go down is worth rupees 2 lakhs. The policy amount is 5 lakhs. But what has happened? Loss is only 2 lakhs. Insurance company will compensate only what? 2 lakhs rupees. Because as per this principle, fire insurance are not issued for making profit. Because out of 5 lakhs, 3 lakhs is safe. How much is lost? Only 2 lakhs. So that lost amount only the company will give the compensation. Insurance will be giving us compensation. That is why I told what? This is not applicable to life because we cannot measure the human life with what? Money. So full policy amount will be given to the policy holder in case of life insurance. Actual loss won't be compensated. Understood? So that is why it is called as what? It is not applicable to which one? Life insurance. Guaranteed to put the insured. Why this in policy they are following? Principle they are following. Because the insurance company want to make the insured the same position as he was immediately prior to the happening of the loss. Before the loss, he was the owner for how much? 5 lakhs. After the loss also, he will become what? Owner for 5 lakhs. Because 3 lakhs safe and 2 lakhs compensation. Understood? This is called as principle of indemnity. And fourth principle, let us see, that is called as principle of subrogation. Before going to the part, I'll give one in short explanation. Whenever any person is taking this principle, following this principle of subrogation, after paying the compensation to the policy holder, when the compensation will be paid? After the loss only, na? So after paying the compensation to the policy holder, if anything is left out, any undamaged particle is left out and is having some value, then that ownership of that undamaged article will belong to the insurance company. Because here full compensation is given, full policy amount is given as what? Compensation. One example I will give. Mr. A is having a car. He has taken a policy for 5 lakhs. But one fine day, Mr. A lost his car. He has placed a police complaint also. Okay, but the meantime, insurance company has given the policy amount 5 lakhs to whom? Mr. A. But after some period of time, the police found that car and they handed over to whom? Not to Mr. A. They will hand over to whom? Insurance company. Because for this car, full amount is given by the insurance company to whom? The policy holder. So the car will be belonging to, ownership of the car will be belonging to whom? Insurance company now. That is called as principle of subrogation. So after the insured is compensated for the loss, then the right of ownership of such property passes on to whom? Insurer. Because for that property, the full amount is given by the insurance company to whom? Insured. This is applicable to all contract of indemnity. I told indemnity is not applicable to whom? Which insurance? Life insurance. So here also what they are saying, which the indemnity principle is applicable to which insurance, same manner this subrogation also applicable. So this is not applicable to which one? Life insurance, like principle of indemnity. Because you can imagine, if something happened to a person's life, for example, unfortunately, due to some problem, only one leg is affected, remaining is safe condition. Is it possible for the company, insurance company, to take remaining parts of the body? Not possible. That's why this is not applicable to what? Life insurance. Next insurance we can see principle of contribution. The term contribution, from that you can understand, so many people are contributing the loss. This principle will be applied when the subject matter values a huge amount. For example, a shipping company is taking one policy for a ship, 50 crore. It is a huge amount. So usually if it is a huge amount, one insurance company may hesitate to issue the policy, because if anything happened to the vessel, they have to compensate 50 crore. So they will advise the insured to take 2 or 3 policy from 2 or 3 different marine insurance companies. So take example, Mr. A is the owner of a ship. He has taken a policy 50 crore. He is taking 20 crore one policy from one insurance company. Next to 20 crore he is taking from second insurance company. 10 crore policy he is taking from third insurance company. X, Y, Z, like that. In case loss comes, fully the vessel is damaged, loss is 50 crore, then all the 3 companies join together and they will give what? The full amount of compensation, that is 50 crore. X company will give 20 crore, Y will give 20 and Z will be giving 10 crore, like that. Otherwise, one company will give 50 crore and between the insurance company they will make an agreement. Now I am paying full amount, you people will give the share. Like that, what? Mutual understanding they will be creating. So that principle is called as principle of contribution. This is also just like indemnity principle, not applicable to life insurance. That's a return applicable to all contract of indemnity. Then the sixth one, principle of mitigation of loss. Mitigation of loss is related with one responsibility is there in the hands of the insured after taking the policy. If a person has taken a policy for his factory building, fire policy, after taking the policy, he should not be negligent. If fire breaks, I'm not going to take any action because insurance company will be making the payment. He should not be a passive person. He should, at that time of occurrence of loss, he should take necessary effort. He should put necessary effort, maximum effort to save the property. Who should take? Insured. He should try his level best to reduce the loss to the minimum. So that principle is called as what? Principle of mitigation of loss. Because after the occurrence of loss, insurance company surveyors will come to the spot and they will make lot of inquiry. What time the fire broke in the factory? Who is the first witness? And what time whether you informed the police, whether you called fire brigade, what time the owner came, whether you people taken necessary steps to extinguish the fire, everything they will ask. If you are not taken any effort to put up the fire, then you are not having the right to get the compensation. That is why it is given us the insured must take all necessary steps to reduce the loss to the minimum at the time of occurrence of loss and try to protect the property. The next one is principle of causa proxima. This is the last one. Sometimes, if any owner of the property, if he is going to take a policy, at the time of taking policy, in the policy only they will be writing he is taking the policy against which loss. In case he has stated, I want one policy worth rupees 10 lakhs against fire because I kept a lot of crackers in my godown. Okay, so he has taken the policy against which loss? Which loss? Fire. But unfortunately, some robbers came, they robbed 50% of the crackers and deliberately they put the fire also on the godown. 50% they robbed and 50% is they put up fire. Now tell me how much compensation insurance company will be giving. Will they give full compensation? No, because he has not taken the insurance against what? Robbery. Which cause is stated on the policy, due to that cause, how much is the loss, only that will be given as compensation. He has taken the policy against fire. Due to fire, 50% is lost. So he will be eligible to get what? Only 50% of the compensation. That is called as principle of causa proxima. So when a loss is caused by more than one cause, then the proximate or the nearest cause of loss should be taken. Nearest means what? Which cause is stated on the policy. That should be taken into consideration at the time of fixing the liability of the insurer. Okay, proximate cause will be stated on the policy. So these are the different principles should be followed in case of what? Different type of